Are you looking to sell a property in the near future? Are you worried about capital gains tax? Do you know how much you're going to pay? Well, make sure you use this tax calculator to find out how much you are going to have to pay HMRC. So as the intro suggested, this is a tax calculating spreadsheet. You are going to want to know how much capital gains tax you are likely to pay. Don't trust your accountant. That's right. Make sure you use this spreadsheet to find out how much you think capital gains tax you should be paying against that which the accountant has calculated for you. You need to make sure that you're paying the right amount of capital gains tax. So let's get into the details to find out how to use this tax calculator spreadsheet, which you can download using the link below this video. Before we get into the spreadsheet itself, I want to share with you some videos that I think will be helpful for when you are looking to sell your buy-to-let property investment. The first one is do not pay CGT when selling a buy-to-let property. That's right, there are ways of minimizing CGT, and this video, which is appearing just above my head, will show you how to minimize CGT. You may have lived in the property as well as being letting it out. If that's the case, you can claim private residency relief, and the video appearing above my head now will show you how to maximize all the reliefs to pay the minimum amount of CGT. We've also got the deed of trust. If you've got a husband, wife or civil partner relationship going on and you can utilize each of the CGT annual allowances, why aren't you doing it? It's crazy. You should be utilizing your allowances. So make sure you watch this video appearing above my head of how you can use a legal document called a deed of trust to minimize your CGT. There is, of course, the planning aspect of when you should sell a property investment. Should you sell all your properties in the same tax year? No, that would be crazy. So in this video, which is above my head again, is going to show you when you should sell your property investments. And indeed, if you have got private residency relief, maybe the one remote chance that you have is to move back into that property before you sell it, which will enable you to increase the PRR as well. So, okay, enough videos for now. Let's get into the spreadsheet to find out how to minimize your CGT. So as you can see by this spreadsheet, you are going to enter any details which has got a blue shaded area, and please do not try and include any details in the white shaded areas because these are meant to be protected and they are formula based. So ultimately they give you that tax calculation. Now let's imagine that you've got two people in the relationship of buying a property. What you can do is type in the name of the property itself. So we're going to call it 123 Dale Road. And I'm just going to make sure this is a bit large. If I can filter that through. Hopefully you can see my screen going up and down now. And what we're going to say is we've got 50% of the property ownership in the person's one name. And we're just going to call this person Mary. And total taxable income, let's imagine now that Mary is on £50,000. She's got no CGT losses, but remember, if you do have losses from previous years of selling investments, you could bring those losses forward to minimize your CGT on this disposal. So really important, guys, remember that. You've got annual CGT allowances, so it's £12,000 we take into account, but we have got the source of HMRC CGT allowances link, which you can double check yourself. And then we've got the purchase date. So what we'll do, we'll keep the date as it is, 31st of January 2000, just 2000 in fact. And what we're going to say is we're going to sell the property 31st, unlikely, but here we go, 31st of 12, 2019. And that's going to give us the period of ownership days of 7,274. We're going to come back to that of why that's so important, but we'll describe this later on. You can see that there is days split, right? So we can't really enter information into that because that is driven by the third sheet, which is the days calc. Again, we'll come back to that. Now you may have a sales price of the property. Let's say you sold the property for £350,000. You purchased the property for £200,000. Don't forget that you've got less the purchase price. Oh, sorry, that's the sales fees. So let's say the sales fees is 5%. So in fact, we'll just say £10,000. Less the purchase price, so that would be the £250,000. Less the purchase fees, so don't forget your legal fees, any SDLT that you may have had on that as well. So we'll just say £5,000 for now. In fact, you got your stamp duty there. We'll ignore that for now. Because I've put it into the other cell. Less any capital refurbishment. So capital refurbishment is things like extensions, things that you've made improvement to the property. You may have had a dilapidated property. You didn't claim the refurbishment cost against your income, therefore you can claim it against your CGT. So what we're going to say is we paid £20,000 as an example. Straight away, you'll notice that we've got the £350,000, which is the sales price, less the total cost now, £285,000, gives us a profit of £65,000. We've already said above in this cell, in row 15, that you have 50% of that property profit. And what that will do is then give you all of your relief. So less private residency relief, because you lived in the property. We'll come back to that in a second. You've got taxable profit, and then down at the bottom is how much tax you pay. Right now we're showing that we're paying the minimum amount of tax. Now we'll go to person 2. Person 2 is relatively easier. So the percentage share of the profits is 50%, which is calculated based on this. You can enter that less, because if you've got more than one person involved, then they will have less than 100%. If you've got more than 2 people, so you've got 3 people in a relationship, one person may have 50%, as the previous example, but in this example, this person may only have 25%, as an example. So you need to change these numbers according to your requirements. You can put in the person's name, so Mr. B, for example, taxable income. Let's imagine that they've got a job of £20,000. They haven't got any, in fact, yeah, they've got no CGT. Let's not muddy the waters, but if they had CGT losses to bring forward, they can do that as well. And they've got CGT annual allowances to utilise up. And straight away, all this then does is gives you a bunch of calculations, but at the bottom is CGT payable right at the bottom. We've left all the workings so you can see how it's all being calculated. And what we've got now is days calcs. So this is whereby we want to make sure we get the right number of days situated here. So remember, we've got the property 31st of January 2000. Now they may have lived in that property to the end of December 2000. So they lived in it for that property for pretty much 1 year. And then they vacated that property and rented it out ever since. Now we've got to remember that if we go back to person 1, we have put the dates the 31st of December 2019. So that is the last day that we should be showing on the days calc. So you do need to be careful about that. So we'll put in 31st 12 2019, and then it will say days rented out. Now the days that you'll see here at the bottom in line 38, row 38, shows 7274, which is exactly the same number as we've got here. So it's a good check to make sure you've got completed all the relevant details. Now we've done that, this person clearly will have what I would call the, let me just go into one cell here. Okay, just want to double check something here. So what this will do for you, it will automatically calculate the last 18 months, which is your private residency relief, because you lived in the property. You get that relief irrespective if you've not been in that property for a long time. Private residency relief is such a good relief to have. Make sure that you claim it, and make sure your accountant has put that in as well. So what this will do is it will do a bunch of numbers. You'll see a days empty minus 547. Don't worry about that necessarily, because what we wanted to focus on is this 7274 just there. You'll notice if I try and enter any data in there, it will stop me from doing so, just to protect the cells. So now what we've got is a situation whereby this person has now got £3,533 tax, so 3533 CGT on person 1. If we go down to person 2, we could scroll down and see that they've got 2271. And the reason for that is because this person is a high rate taxpayer, so their 50% allocation is being marked at 28% CGT. Person 2, however, is a basic rate taxpayer, so CGT is at 18%. What does that tell you? Well, if anything, it's going to say that person 2 has a lower tax band, therefore we need to manipulate this spreadsheet to find out how many days, what percentage share person 1 should have and person 2 should share. And that's what this does here. This one spreadsheet basically tells you the bunch of details that you've got from person 1, person 2. It's just working through all of the allowances, all of the reliefs that you can get. And it shows you there then row 25, 26, which is the most important one, is how much tax they are going to be paying. And we can see that person 2 has got more tax. Person 1 is a high rate taxpayer and therefore pay more tax than we want them to. We want person 2 to be taxed because they're at 18%. So we're going to have to change the ownership. So what we're going to do is worth changing these numbers. So this is a highlighted cell, so we can change this. It's a drop down list box. So what we're going to do is say, well, let's imagine that person 1 has less of the interest of this property to, let's say, let's go down to 35%. What does that do? Well, it will rebase the capital gains tax liability using the private residence relief, the CGT annual allowances, and it will basically give you now your tax calculation. You'll notice already it's saying the total tax saved by using a deed of trust to lower the amount of ownership for person 1 using that deed of trust is saving £739 CGT. I think we can go further. If we change that percentage ownership down to 10%, what will that do? Well, straight away, we've got no tax to pay. Now, the problem is with that is that their total gain is now just 6,500. Why is that a problem? Well, CGT annual allowances. Every person will get £12,000 CGT annual allowances. So we don't want to lose that allowance if we can help it. So 10% really is too much of a reduction of ownership. So what we're going to do is then manipulate this. We're going to go up by increments of just 5%. You'll notice that says now 9750, still not enough. We need to go up again. And let's go now to 20% ownership, which is £13,000. So it's about right now. So what we're going to do is see the tax implication of that going through. Now, we've noticed that straight away, we've got the PR of 1576 plus the £12,000. There is no tax to pay. This has saved £874. This video alone has saved you £874 if you've got the scenario going on. And we could just change this number. What we're going to do is keep our eye on this percentage number and this number just down below. So if we change this again, let's just go back to 15%. What's the tax saving? 431, not so great. We already know if we go back to 20% ownership for person 1, the tax saving is 874. Let's keep going. So 25% ownership gives us 1231. This is good. Now this spreadsheet is giving us the maximum amount of reliefs now. So 1231 is the tax saving by changing the ownership of this property. This is really good, guys, for you to save some tax straight away. And then we go to 30%, not so good. It goes down now to 985. So what we want to do is go back and say 25% ownership. Perfect. What we will do the day before we sell the property, we do a deed of trust between husband, wife, civil partners and say person 1 only has 25% ownership, because you can change the ownership between husband, wife and civil partners and there's no CGT. So why not utilize this great incentive? Now this can really work as well if you have a property that's solely 100% in one person's name. You've got another person in the family that you can utilize the CGT annual allowances, husband, wife, civil partners, then why not use this spreadsheet to change that ownership from 100% to 50-50 and get that CGT annual allowance used? So hopefully guys, this has been useful for you, and hopefully it will save you a bunch of tax as well. So I hope the presentation and video was useful and you got a lot out of it. Now, you may want a property tax specialist to help you in the future. And if so, you can book to discuss our services using the link www.optimiseaccountants.co.uk, and you'll get the opportunity to speak with Jan Minty, our Business Development Manager, who will talk to you about our services. If you want a tax advice and call to discuss this subject or indeed any other subject at all, then why not book a tax consultation with me? You can do so using the link again, www.optimiseaccountants.co.uk. So the process of the tax solution will be that you can upload your documents online. I will be able to read those for about 60 minutes and identify the very best solution for you. We will then spend 60 minutes on the call just talking about the solution. There is no point talking about the pains and all the issues that you're currently facing. What you want is a solution, and as quickly as possible. And that's why I do my research before the call takes place. And then after the call, after the 60-minute conversation, I will then go away, do further research, and I will then give you the documents and any spreadsheet templates that I have that will be helpful for you. My name is Simon Misiewicz from Optimise Accountants. I'll see you again soon.